We'll move on right away to Stefan Stanisklawski, who is going to give us an imagined presentation, I think, to draw out some points by that route. So over to you, Stefan. Thank you.
Thanks. Well, the slides are real. The scenario is imagined. This is the comedy part of the presentation. Last year we did a report. You can see the front cover there for the Fibre to Home Council, which was about how to stimulate investment in fibre. What I discovered in doing that is there is a huge amount of money available to invest in fibre, if only the industry would go about it the right way. We met pension funds almost desperate to invest in fibre projects. The problem is the structures that the industry uses to go and approach those funds. So I went massively beyond the brief and came up with an action plan, which I've adapted for Scotland. But let me just tell you about myself a little bit in a few sentences. I'm mainly a consultant, but I do own part of an operator in Sweden, which is a fibre operator. Sweden, you may know, was the first country to be very bullish about fibre investment. 50% of homes in Sweden are now passed by fibre. Last year it went up to 54. At 4% were all in single dwelling units, so standalone homes with big gardens, and customers will pay anything from £500 to £1,500 to an operator to bring fibre to them. So that's how much the Swedes like fibre. I'm also involved with real estate telecom. That socket there hanging out of the wall is a new apartment in Warsaw I went to last week. In Poland, all new apartments, and I think this is an EU measure, have to build in Cat5 cabling to a central point. Haven't quite got it right yet. You'll see the eagle-eyed ones that is a very small cabinet and there's no electricity. So some improvement needed. We're going to send a plan of a Swedish-style cabinet to the developer to help him get it right in the next phase. And another client of mine was Jersey Telecom. They, although state-owned in the states of Jersey, run like a business. They have a profitable plan to do what I call a fibre switchover, which is to remove all the copper, replace it with fibre. We'll give them a lower cost operation and considerable benefits for the island. So that's my background. I think in this sort of event, we're talking about infrastructure. To me, infrastructure means fibre. Some people say, why do you need fibre? I think it's, not only is it a lot better, it's also cheaper. And of course, from a regulatory point of view, the regulator should be looking ahead over a long period of time. If you can deliver a new infrastructure to people, or the industry can, which is cheaper, that means lower bills. So we don't really need to debate whether fibre is a good thing or not, whether people need 100 meg or something. Fundamentally, in the long term, it's cheaper. Society does not progress by sticking with obsolete technologies that are more expensive. It has to move forward. And that's why I think fibre is important, and it should be the basis of your infrastructure policy. And what that means is the little coloured plastic things there at the bottom, those are microducts without the fibres in at the moment. You need to get a pipe past every home. So this is essentially a big construction project. And this is another confusion, I think, that we've inherited from the 1980s. We see telecoms as a sophisticated technological business. Part of it is. The other part is actually just basic infrastructure, plastic pipes and glass fibres. And the two are quite distinct. They have different investment cycles, different economics and so on. And I think that confusion has caused a lot of problems and continues to cause problems today. Let's do a reality check. Telecoms fixed operators in the UK, there are two main ones. BT, that's the blue line. Their price went up 50% over the last year. Brendan should be smiling now. Their options are doing well, no doubt. That's a good rate of return. The bottom line is the FTSE. So BT's beat the FTSE very comfortably. Of course, the red line is Virgin Media, or the takeover talk, 120% I think it is up. So these companies are in good shape, at least in terms of the share price. If we look at some other metrics, down in the bottom left, the green one is return on capital employed. So BT and Virgin together average about 15%. Those other sectors there are all UK listed sectors. I've got this off my stock market investment tool. It's not particularly sophisticated, but it does aggregate up sectors for you. So you can see the bottom one is multi-line utilities. That's Centrica, and another one which I've forgotten, water utilities in the middle. So these two companies have much higher return on capital employed than any other utility sector. And I regard telecoms fundamentally as a utility because of that bit about all the wires and so on. The F score on the bottom right, the blue area, that's a measure of financial health. They're very financially healthy. In fact, all these big companies are very healthy. you start to worry if the F-score is less than 3 or 4. So these are all very big companies, but they are on the healthy end of the healthy. Profits, this is the yellow area, top right. The BT and Virgin, again, at the top slice. They are in the middle of the pack, ahead of electricity, utilities, and most telecom companies. If you look at, finally, at the light blue area, top left, telecom services market cap is enormous in London because we have secondary listings from Verizon, NT&T, and so on. So that's 600 billion pounds of enterprise value. That's not all in the UK, that's from all over the world. So if you look at the profitability, you're comparing BT and Virgin to average telecom companies around the world, which, because they're listed, are quite large, they're more profitable than the average. So these companies are doing well. That's either because of or despite of, depending on your point of view, their strategy in terms of modernization. Because as a country, or Scotland as a new country possibly, I think our lack of modernization of fibre is a real embarrassment. If you look at this map from the FTTH Council Europe, the dark shade is countries with more than 1 million homes passed by fibre. So Sweden, for example, is dark, and they've got a population of 9 million. Germany, 80 million population, dark. Spain, Portugal, etc. We are in yellow with Ireland and with Poland, which will be Poland outside Warsaw, I suspect, and Belarus and a couple of Balkan states. So we're really at the bottom of the league table. Germany's got something like 10 times the fibre coverage that we have as a percentage of homes, and it's already regarded as a laggard compared to France, Portugal, and so on. I don't want to mention Kazakhstan, but I feel obliged to. Last year, they installed more fibre in a single year than we ever have in the United Kingdom. There's Borat. He's either pleased because of their progress or he's laughing at us because of our policy, or both. One thing that is important to note, I think, came out of my project is the fact that customers are actually paying for a modern infrastructure. So if you're a customer of a regulated company like BT, you are paying in your bill for that infrastructure to be modernized. And the formula is there on the screen very roughly. It's very simple because you can make this very complicated. But essentially, it's like depreciation, capital cost over the asset life, add on a fair rate of return, maybe adjust for asset utilization. If you've got something that's shared, maybe something that's going out of favor and the asset use is going down, you have to boost the price a bit. So the fair rate of return is like a profit for the investor. That's how it works. But the key thing there is an asset life. So if an asset's going to last 10 years and it costs £1,000, then I've got to get 1,000 divided by 10 every year plus the return. That's how it works. Let's look at telecom local loop. If you imagine that your local loop cost just over £1,000 and on average had 25-year asset life, which is typical of telecoms, so it'd be 18 or so for overhead cables, 30 plus for buried. Average for the United Kingdom will be about 25. Ofcom has said the WACC for BT Openreach is 7.4, I believe. That will give me £7.44 a month that is paid for the renewal of that infrastructure. That means, logically, on average, about over 25 years, we should be getting fibre everywhere. So we are paying in our bills for the infrastructure to be renewed over a 25-year period. So if we got to the end of 25 years, we should have fibre everywhere. If we started in 2008, which would be a reasonable date to start from, we should have about 15% of homes served by fibre already. It's a social contract, and I think that underlies all utility regulation. It doesn't have to be telecoms. A fair and stable price is paid for the periodic renewal of vital assets. That, as a society, gets us modernity, efficiency, fitness for purpose. We must remember that fibre is cheaper to run than copper. Now, if the regulator or competition doesn't prompt that refresh, then the customer is basically paying for something they are not getting. And I think that's unacceptable in the long term. It also is not good for the utility because they're essentially getting what they think of as free money. That is, they're being paid to replace something they're not replacing. That's got to distort investment decisions. There's a risk that it distorts the perception of stock market investors. Standard solution in electricity, which we didn't adopt in telecoms, is to have a sinking fund. So if you have a big asset like a power station that's going to run out or become obsolete or unserviceable in 20 years' time, you build up a reserve, a sinking fund, so that when it comes time to buy the new power station, the money's in the bank, or at least most of it. We didn't do that in telecoms, so we have a problem. What would I do if I were a telecom minister of a newly independent Scotland? It's not going to happen. I don't mean independence. I don't know about that. But I regard myself as totally unelectable. And even if I changed my name to my grandfather's name of Rennie, I don't think anyone would believe I was Scottish. However, what would I do? Maybe I'm his advisor, well, her advisor, the new minister. Whole country has got to be modernised in no more than 12 years from today. This is my brief that we're getting now from the new government. We've been chucked out or left the EU because of independence, so we don't have to be tied into that 1980s style of regulation that served us well for a few years but is now obsolete. We can't scale the capital markets, new country. We've got to keep all the rating agencies and so on the side. And public money is going to be tight. It always is, particularly so with a new country. So what would I do? Goal, I think it's important to set a clear goal for government. So my goal would be modernise the access network while keeping prices at or just above current levels in real terms. We're going to have a fibre switchover. We get rid of all the copper, put fibre everywhere. I'll probably have a mobile policy as well, but I don't have time for that today in this short presentation. Technical measure, I'll define universal service to be symmetric broadband at 100 megabits per second. No voice. Fixed voice is largely irrelevant now. It's a historical anachronism. I'd get rid of it. I estimate, without any solid evidence, but from vague memory, that the universal service funds flowing around within Scotland from the cities to the country, about £54 million a year, very roughly. That's now going to go through my ministry so I can make sure it goes to fibre and not to copper. That gives me something to play with and start to borrow money against. I'm going to have a contractual approach to telecom regulation. I want to have lots of competition in services, infrastructure, economics are different. I want to have a contract with one or more providers who will build a modern infrastructure and will maintain it at a fair price with a reasonable return. BT is the ideal candidate. I'd like to do a deal with them, come to a deal where we can agree terms where the government will put in some money and there'll be a clear contractually binding set of milestones toward a fibre switchover. Let's suppose, I'm sure Brennan would want to agree, but London doesn't let him. Then I'm going to have to do something else. So I'm going to have to start a new fibre utility, or possibly, say, 5 regional utilities. What I would really like to do is get that £7.44 back from BT that they're paid for modernisation, but I'm guessing that I probably wouldn't have a legal way of doing that very easily. So I'm going to have to do it without that money. Now, I reckon it's going to cost £2.6 billion to pass every home and business in Scotland with fibre. This is a very rough estimate. I did my own for the whole of Europe. Actually, I have to say I've just did this one again from first principles. It's not guaranteed to be consistent. What I think is surprisingly low cost in the cities. You'll say, why is the urban and the extra urban, like the slightly lower density areas, less about £400? Why are they different numbers when the numbers are the same? Well, it's because I got to the figures in different ways. So it's coincidence in the case of Scotland, I believe, that they're the same. Rural, very expensive, last 5%, who knows? I've guessed around £3,000. Could be very, very expensive. If you look at the mix of where people live, so the inner ring is where people live. So the last 5%, you'll see in green, they take about 15% of the total capex. The cities in light blue only take about 11%. The variable one, the unknown, the big question is the one in the middle, the green, the light, sort of brighter green, which is the rural areas. You've got about 35% of the population, I'm estimating very roughly, and about half the capex or more. So that's a big one. That's where you've got to work on getting the cost down. In short, there are about 2.5 million premises in Scotland, and I'm estimating cost of passing with fibre, not going into the home, is just over £1,000. So what would I do? Set up in fact, today, Monday, a friend of mine, or acquaintance rather, of mine in Slovenia is opening his own open access network, and it's a GPON network, and it's going to do this. He has a cable company signed up, so there are 2 frequencies of light used on GPON. One will use the telecom technology and support a series of different brands, like Sky and so on, using telecom stuff. And in exactly the same fibres, we use the other frequency to deliver a cable TV network. I've put small world cable as first choice, in a blatant attempt to get a pint later, Stuart. Virgin Media would be a fallback. The difference between the two, with cable and telecoms, of course, is the cable world is closed. That's how DOCSIS technology works, I believe. But here we have duopoly type of competition extended even to the most remote premise in Scotland. The fibre network is going to be built by one or more netcos. 5 or 6 feels like the right number to me. And there's going to be an asset management company, or possibly more than one, running these infrastructures and selling its services to those retail operators. Now, the key thing really in market risk, and you mentioned this in your presentation at EIB, if we can take a collection of brands, there's a big if, to premises for the first time that have previously only had a monopoly, certainly had no cable TV, I'm betting we can get 50% take-up. We've seen it in some projects. Often it's more, sometimes, often it's less, sometimes it's more, but I'm guessing 50%. So I run my numbers on 50% end of year 1. After 5 years, we get 600,000 customers. This is obviously taking a while to build out the whole of Scotland, 10 years of construction. After 15, 20 years, we're at 1.6 million. The rest served by BT. They may come on board. I think it would benefit their shareholders if they did. I've called it a money tree. It's a split of revenue. So I've taken an ARPU of £45. That's a bit less than Virgin Media's ARPU, but theirs will be after VAT, mine's before. And I split it roughly 3 ways. That's what tends to happen in Swedish open access networks. At the bottom, you see Netco, which is the builder of the fibre. They're getting just over £13 a month. That's what they've got to fund all that construction with. What's interesting, and the unique role of government, of course, is that the government is the beneficiary of an awful lot of tax revenue from the jobs involved in construction. So over that 10 years, you see in the blue graph, jobs created, about 6,400 at the peak. And those jobs generate a lot of extra tax revenue, both in terms of taxes on labour, income, and the first round of spending of half of that income I've assumed on VAT. So that's about 400 million over the period of time. So I'm suggesting that this new government and this new country invest back 200 million, and the cash flows to the government down there at the bottom. So actually, really, the financial exposure, if this project all went ahead according to my plan, for the Scottish government, the new Scottish government, would only be about £30 million in year 2. Because they're spending money with one hand, but getting money leveraged up by private debt and so on back through another. So the balance actually is only slightly negative, and in fact, for most of the period, it's very positive. So this doesn't actually, the net cost of the government is actually quite low, but of course, when you think about financing these projects, government is really in a unique position because they're the one who collect the taxes on labour and on VAT. So this really is a unique feature of government. You can't privately finance on the same terms the startup fibre project. So I just advocated, or I was told, and I don't know if this is true, but I was told that Germany's financing about 30% of tranche of FTTH costs using a loan from the EIB at 1.3%. And the cost is low because it's backed by a sovereign guarantee. That's what I was told. Let's assume Scotland funds 25% of the financing needed each year in the same sort of mechanism. I know that you might have been chucked out of the EU, but let's just assume that you can get a loan anyway, for my purposes. I treat that sort of sovereign guaranteed loan as a kind of pseudo-equity as far as other banks are concerned. I don't know whether bankers would agree, but that's my view. There is essentially no risk. It's guaranteed by a state. Hopefully the new Scottish state will be stable. Year 9 is the peak funding year. You'd have 1.3 million paying customers then, revenue of 230 million a year in the netco. And the capital would look like that, about 200 million of equity, that's come from the Scottish government. The pseudo-equity, as I call it, 400 million. And bank debt on commercial terms, almost £1 billion. And the ratios there, I believe, are sustainable. I'm not a banker, so I don't know, but 0.6 debt service seems to be acceptable. Benefit to the taxpayer, net cost, or the risk, because if you take all of that sovereign guarantee, which you wouldn't necessarily do, but if the new Scottish state took all that sovereign guarantee, your exposure is about 240 million. The value of that asset that you've created in Netco is almost 2 billion, kind of almost 8 to 1, 10 to 1 return on your investment. Plus you get a new modern infrastructure and any other indirect benefits. That's one way of doing it. In our report, the one I showed you the front cover of, we looked at PPPs. I haven't got any detail on that because I think I'm probably out of time, Mr. Chairman, but a PPP is another way of cutting the cake. In that case, we'd probably pay compensation to BT if BT would agree to sell us some assets. And you can essentially the same overall investment sliced in different ways as slightly different types of financial institutions. But really the key point is that government has a unique role because you are getting back, or the government gets back, a big chunk of the construction cost, which is the main element in NetCo. So if you factor that into your calculations, Fibre actually looks quite an attractive proposition for government, uniquely. Thank you.